I got a novel idea. I'm going to bring you some solutions in case you think you've been discriminated against. Because this entire discourse around the Navy Federal story about the discriminatory lending practices is totally disingenuous. The vast majority of folks are posting it just for clicks and because it's trauma porn. If you haven't heard what I'm talking about, this is the story from CNN. The nation's largest credit union rejects more than half its black conventional mortgage applicants. They had the largest gap between black and white applicants amongst the top 50 lenders in the country. This is how I know the folks posting about the story don't care because do they tell you who number two, three, four, or five is? No, they don't because I'm guessing two through five are banks you haven't heard of and they don't get clicks. Because I guarantee you, if Wells Fargo is in the top five, you know the exact number for that branch. Because the exact number we know for Navy Federal is there's a 29% gap between black and white applicants. So in today's episode, I'm going to bring you a story from my experience as a mortgage lender working in these low to moderate income branches, which are historically in black and brown communities. I'm going to give you some questions you can ask your lender when you're interviewing them to help reduce the likelihood that you'll be discriminated against, and also 3 questions you should definitely ask your lender if your loan has been denied. If this is your first time hearing the sound of my voice, my name is David. I have a background as a mortgage lender, a mortgage underwriter, and a realtor. I've also purchased multiple homes myself, but most importantly, I've helped hundreds of folks just like you buy their first home in real life. Let's go get those keys. Welcome back to House Rich, the first time homebuyer show, where we provide you actionable steps in layman terms to buy your first home. Let's jump into this Navy Federal article. I'm going to cover it from a very high level because I don't really care about the article. I care about the solutions. You can read every other post about folks just posting platitudes that talk about the article, provide zero analysis and solutions, and then they probably go to lunch, pay with their Wells Fargo debit card, and then look at their iPhone and see all the likes from the post, and then they just caring about their day. And then they wait for the next article to just repost it. But here's the approval rate data for 2022 at Navy Federal. For white applicants, it was 77.1%, Hispanics, 58.8%, and for blacks, it was 48.5%. So that 29% gap was the largest gap amongst any of the top 50 lenders. Now you may be thinking, well, just historically, like for various reasons, typically black applicants have lower credit scores than white applicants. And I agree with you. That's a very good point. But the article also broke this down. Even when considering similar debt to income ratios, the racial disparity still existed. Navy Federal approved a higher percentage of applicants from white borrowers earning less than $62,000 annually than black borrowers earning more than $140,000. So clearly there's some systemic issues at Navy Federal and honestly every single bank in the US. And I can tell you from my perspective of working in one of these low to moderate income branches when I worked at Wells Fargo. So here's what happens. Typically, when you're new to the business, you start at these low to moderate income branches because most folks don't want to work there. And it's not really for the reason you're probably thinking of. It's not because, hey, folks don't want to be around black or Hispanic folks. It has to do with money. So, like at these low to moderate income branches, I'd say maybe for every 10 people you talk to, maybe one is going to be eligible for a loan application, whether the issue is credit, debt to income ratio, funds for the down payment, or just folks not being ready to buy. And let's say the average home price in that area is $250,000. So what happens is you work at the branch for maybe 8 to 10 months. At that point, you get to really start knowing the branch personnel. You're kind of doing your training. You're talking to the tellers, tell them, hey, this is what you look for. This is how you help your customers get a loan. And you get to know some of the members of the community as well. But then eventually somebody leaves at a branch that's a little bit higher up in the economic totem pole. Folks move up, and then you have opportunity to go to another branch. And here's the thing. Everyone takes an opportunity because it's a pay raise. Because think about it from this perspective. So now at the higher income branch, for every 10 applicants, maybe now 2.5 of them qualify for a loan. And now the average home price may be $325,000 versus $250,000 at the previous branch. So at the previous branch, maybe for every 10 people you talk to, you may be able to earn about $2,000 in commission. Now at this other branch for every 10 people you talk to, because more people convert, higher loan amounts. You may get like $7,000 for every 10 people you talk to. And I know a lot of people are saying, well, you should be about the community, virtue signaling, et cetera, et cetera. But what would you do if your job offered you a higher pay rate with no extra added responsibility? It's not like you're doing more work. You're talking to the same number of people, but you're getting better results in the higher income branch. So that's what happens. So there's typically a larger turnover at these lower branches. Sometimes they don't have people in the branches at all because folks are like, I don't want to work at this branch. So that's what leads to a lot of the lack of knowledge at these branches. And then it's exacerbated even more by the fact that 72% of whites are homeowners and 44% of black folks are not homeowners. Therefore, they typically don't have the same knowledge going into the transaction. So if there's a branch where there's nobody really there to train you, the white person is going to have a better opportunity to excel than the black person because they know what questions to ask. They know how to prepare themselves better. And if they are rejected, they sometimes know what questions to ask in that scenario as well. So let's talk about some of the questions you should be asking your lender during the interview process. And yes, you need to interview your lender. Once again, as someone that worked in a low to moderate income branch and a higher income branch, there's a huge disparity between the questions that I've asked. Typically in the low to moderate income branches, I don't get any questions. The folks are just like, hey, how do I qualify? And then if you get somebody good like me, they'll explain it to you. If you get somebody else who's just looking for the next opportunity, not that I wasn't looking for the next opportunity as well, you won't get that same TLC, right? So first and foremost is a very basic question. It's just, hey, tell me about yourself. Because asking that question will reveal a lot about the person. They may tell you about themselves. They may tell you about their ties to the community. They may just tell you about their time at the branch. But you'll get to know what that person considers is important by asking that simple question, tell me about yourself. Also, another great question is, how long have you been in the business? Once again, there is no right or wrong answer to that question. It just lets you know how long they may have been in the branch, what their level of expertise is as well. And sometimes like very new people are very eager to teach you and are more likely to pick up the phone at odd hours versus somebody that's been in the game for maybe 4 to 5 years and just like, hey, this is how I operate, take it or leave it. I know some very successful loan officers that are like, hey, I put in the hours when I started, but now I'm just working from 9 to 5. So if you need some, and that's Monday through Friday. So if you're going to need some help outside of those hours, especially on the weekend, they may not be the lender for you. I'm a realtor in Dallas and would love to help you reach your goals of home ownership. So click the link in the description and just schedule a call no matter where you are on your journey. Not in Dallas, no worries, I can help connect you with a vetted realtor in your local jurisdiction as well. And feel free to share with friends, family, and foes. Everyone gets love. Another great question to ask is, what loan programs do you specialize in? There's a big difference between different loan programs. Like conventional loan, every single lender offers that loan. All lenders are not aware of how FHA loans work, believe it or not. There are a lot of intricacies and details that involve FHA loans when it comes to qualifying for income, the FHA self-sufficiency test, etc. Also, lenders can have VA loans, but all lenders don't do VA loans. They're a lot more complicated than you may think. Same with USDA loans. So if you're like, hey, I'm looking to use a specialized loan because I'm a veteran, you may want to work with a lender that has experience with using a VA loan. Another great question is, what are your hours and what is your communication style? Very open-ended question, but it allows you to have that lender tell you about how they like to communicate with their clients, and hopefully that works for you. If it doesn't, maybe they're not the lender for you. And last but not least, like, how long will it take to hear back on my application? Because here's a quick secret. It takes a lender sometimes maybe 5 to 10 minutes to figure out if you're declined for a loan. Not necessarily approved, but they can figure out like right away if you're declined for a loan. So ask them how long it takes to hear back. Because here's what happens. You apply for a loan online, you put in your information, and you say, hey, do I have permission to earn credit? You say yes. The lender just pushes a button, and so right away they know, hey, if this person is denied due to credit, they don't necessarily know if you're approved right away because they have to verify stuff like your income, etc. But like credit is one of those no-go criteria. So you want to be able to know from that lender, like, hey, when will I actually hear back? Because for the folks that are declined, and I'll tell you how I used to operate, and I think most lenders operate like this. It's like, okay, this person only has a 550 credit score. they're not going to be able to be approved for any loan program. So I'm going to put this application on the side, and I'm going to work through the other applications to see if those people can get qualified. I'm going to call them back at the end of the day to let them know their approval went through, give them their approval letter, touch base with them and their realtor, and then the folks that were declined, they kind of go to the back of the line because they aren't income generating customers like right away. But for the folks that were declined, at least I would reach back out to them and let them know that, hey, this is why you were declined, and here are some steps you can take to get qualified, and maybe send them to a credit person, or kind of give them a income plan or whatever, that wherever they were deficient, I will help them put together a plan in order to become a homeowner down the line. But a lot of folks don't do that, just to be honest with you. Because even though lenders are legally required to tell you why you were declined, here's how it happens a lot of the times. They just send you a letter in the mail that says, hey, you were declined because due to credit. And so it's very vague, and there's really no way for you to put together an action plan. But some lenders just do it in the mail because they know that all loan officers are not going to take the effort to reach back out and communicate with you via email or the phone. So here are some questions you should ask your lender if you're declined, because you'll be declined for one of three reasons, maybe three of three reasons if your credit profile is a little bit tough. One is credit. So you want to ask them, one, what your credit score was, and were there any derogatory events on your credit report that resulted in you being declined? And even ask them if they can send you a copy of your credit report. Most lenders will say no, they can't send you a copy of your credit report because they're not credit reporting agencies. What you can do is ask what your three credit scores were for Experian, Equifax, and TransUnion, and then go to annualcreditreport.com and pull a copy of your credit report, because on that website it'll show you what's in your credit report but not the actual credit score. But you also want to ask your lender, was I declined due to the minimum credit guidelines or your specific lender overlays? Because lenders can put overlays, which are additional guidelines on top of the credit requirements. For instance, the minimum credit score for an FHA loan at 3.5% down is 580. However, most lenders will be like, hey, we want you to have like a 620 or 640 credit score because the 580 credit score is a little bit too risky for our liking. So now you're like, okay, I got a 605 credit score. The lender I went to required a 620 due to their overlays, but I can find a lender that only goes by the minimum FHA guidelines of 580 if I'm really ready to buy a home. So at least you have that option. You also want to ask, were there any items I could have paid off on my credit report to help with my debt to income ratio? Because let's say maybe you had a car loan that had maybe $3,000 left on it, and that monthly payment was like $780 a month. Well, you putting down $3,000 and paying off that car would remove that $780 from your debt to income ratio and help you qualify for a lot more. But you also want to make sure that that $3,000, of course, is not impacting the funds you have to close on the property as well. But that's something you may want to look at and weigh the pros and cons of maybe paying off a debt that's on your credit report. And as of note, typically you'll have to pay off the whole debt. Like paying off part of a debt does not do anything to help with your debt to income ratio. Now, speaking of funds for the down payment, let's say you may not have had the funds for the down payment. Like based on the loan amount, your cash to close could have been $20,000. You have like $10,000 in your account. What most lenders will do is they'll still give you the pre-approval, but they'll say, hey, you're going to need let's use a closer number. You're going to need $20,000 and you have $15,000 in your bank account. So you need to either save up another $5,000, you need to get maybe a gift from a family member for $5,000, or maybe you need to get a seller concession for $5,000 in order to close on this home. So feel free to go out and make offers on properties, but if you don't close that $5,000 gap, like the joke's on you when it comes time to actually close on the property, because you're not going to have the money and you're going to lose your earnest money. I know as a lender, I typically would tell people and lay out this scenario and still give them the pre-approval letter. But some lenders are like, hey, if you can't show me the funds right now, I'm not going to give you the pre-approval letter. So there you go. There are some solutions to this issue over complaining and hand-wringing. So I'm aware that racism exists and it exacerbates a lot of these issues, but I like to focus on what I can control, which is the educational aspect. But if you got some political pull, if you're a lobbyist and you know how to get things changed on the other side of the coin when it comes to these systemic issues in the branches and banks, let me know. I'd love to have you on the podcast for an interview and actually bring some light to the issue. But I'm going to focus on the issues that I can control and issues I can know I can help you to control. But as always, buy land. Rumor has it they're not making any more of it.